So a lot of you have been asking me about this crazy looking indicator that I have at the bottom of my screen. And today I'm going to make this video so I can break down why I'm using this indicator. All right, so as you can see on my screen, I have price action from December 18th where we had an FOMC day. So there's going to be a lot of volume and a lot of volatility on a day like this. But I'm going to take you through some of the midday action and give you multiple examples of how this indicator right down here, this little indicator, it looks crazy, is going to help you get in and out of some trades. Okay, so let's take a look for some short trades. Yesterday was a bit of a red day, down 3% on the NASDAQ. So we're going to go ahead and see if there was any signs where we could have gotten short on the day. So looking here at around 10:48 a.m., we see this move on the way up. Okay, so we ask ourselves, let's make sure that we catch a short, but let's not catch it at the wrong time. So what we'd like to do is look at our indicator down here and see when the indicator tells us that we're overbought. Now, right now we're looking at a 1 minute chart and we have a VWAP right here and we have our EMAs 8, 13, and 21 on the screen. But this indicator here is going to tell us when we're extremely overbought. So when you see these lines that I'm going to show you right now, when you see these lines cross over this line here, it's a 50 mark. Anything over the 50 mark is going to be considered overbought, or it's maybe extremely overbought depending how high we go. In this circumstance, we wanted to buy 75. When we see that, our antennas are going to go up and we're going to look for an opportunity to look for a short. Now the key is for us to go into a short once these lines cross over. Now these lines are not stochastics, they're not RSIs, they're a Wyckoff based indicator. I don't know the exact formula. All I know is it works. What we do is we do not want to just blindly go into a short or a long when these lines cross over. What we want to look at is for a couple of other compensating factors. Now, this indicator, like any other indicator, is just for you to be able to have more confidence in your trade. So this gives us a signal, hey, heads up. Just like anything under the negative 50 would give us a signal, hey, heads up, look for a long. Anything right dead smack in the middle at the zero line, you should probably stay away from because you're trading in the middle. You don't want to trade in the middle. You want to trade in the extremities. That way you can get a nice run and you can get some really nice moves. So now, all of these bars here that look confusing as anything, what these are volume bars. So the dark shaded areas of these candles are volume, the volume that transpired in that 1 minute candle above us. The green part corresponds to positive volume. The red ones correspond to negative volume. Now, what you see above it are empty bars. The empty bars are how much the candle moved. So the volume was this much and the candle moved this much. The volume was this much, the candle moved that much. Why is this important? Because Wyckoff many years ago came up with a principle called effort versus result, or effort versus effect, one or the other. Well, either one is fine. What it tells you is if we use a lot of volume and we get a little bit of a result, that means there is an active counterparty, a seller or a buyer, on the other side of that trade that's pushing the price down or pushing the price up, depending if you're going for a long or a short. So I'm going to give you some detailed examples so that makes a little bit more sense to you. So if we have this much volume, which is a little bit of volume, and we had a pretty decent move here, the candle moved a little bit, probably not something that we want to look at that's going to make a big difference in our moves. But when we have a candle that does good volume, something like this candle here, but barely moved at all, that is an indication that, hey, buyers are trying to push this price up because there's decent volume, but the sellers didn't allow the price to go up very high at all. So this is an indication to you that, hey, heads up, something might be happening. So what do we get right at the next bar here? We get just about the same volume as we got here. The only difference is this volume was to the downside. And look how much the candle moved. It moved a lot. So what that tells us is that there are a lot of active sellers in the market and not so many active buyers anymore. So when we see something like this, when we see this crossover, we see that, well, first we're going to see this candle. First we see this candle, the crossover happens afterwards. So when we see this candle at 1050, let's go at our chart now and take a look at the chart. Okay, so that corresponding 1050 candle is right here. Now, it makes all the sense in the world because that is a bit of a doji candle, maybe a hammer, however you want, a shooting star, whatever you want to call it, doesn't really matter. The important thing is that we had a skinny body, a very small body, and a long tail, right? So it kind of gives you an indication of what to look for. You want to train your eye for these things. So this candle at 1050 gave us this candle, which means that, hey, we're overbought. We've got this weak looking candle. Right now might be a good opportunity to go short. Now, the beauty of a trade like this is that if you were to go short on this candle, once this candle closed, even if you just went into this trade at the close of this 1 minute candle and you put your stop loss right above it, you would have had a 4-point stop loss on an NQ, which is nothing, almost nothing. And you could have taken on that trade a lot more. Let's just say you just took this here. It would have given you 25 points. Now, if you rode it all day, it would have given you almost 1,000 points because yesterday we went down quite a bit. So let's ignore this one and let me show you a couple more examples. So moving right along, right over here. Now, this is another example. The only difference here is that what are you not seeing here? We're not so overbought. So looking back at this 1107 candle, 1107 is right here. We're not really that overbought. So this is probably not a trade that you would have wanted to take unless you were really sure that the market was going to go down and you missed that first trade over here. You missed this entry, or maybe you used this opportunity to reload and add more to a position that you already entered. So let's look at 1107. At 1107, you see that we had good volume, decent volume, and barely any movement at all on this 1107 candle. Again, we had the crossover right after that. The only difference is the crossover was not at the 50 or above. The crossover was right around 29.30, 29 or 30 here on our scale. So this was not as strong of a move as this one was, but let's look at 1107 and see what it gave us. So 1107 gave us all of this, okay? So if you're able to read these, you could really do well. You could really do well in trading. I'm going to give you one more example of this, but then I'm going to also give you some other examples of what you can use this for. So let's go to the big boy, the one at 12 o'clock. They gave us all this dumpage, or 2 o'clock, I should say. All right, so Jerome Powell set to speak, or we're set to get our rate decision at 2 p.m. And a lot of you sometimes like to YOLO these moves. Now, you don't have to YOLO these. You can actually use calculated information, data, logistic information that'll really get you the result you're looking for, and really enter with some kind of confidence, right? So let's look at this. Right around 159, right around here, right, or whatever, 1359, whatever you want to call it. Are we more overbought or are we more oversold? Let's go ahead and take a look at that on our 1 minute, even if you were to scalp this move. All right, so right around the 150s, 2 o'clock time, looks like we're more on the overbought side, okay? Now, any indications here, any candles here that kind of stick out to you, okay? You kind of got to train your eye to see these. In this cluster here, anything you want to look for, okay? We've got one right here. Pretty decent volume. As you can see, the volume was up to like a 40, but barely any movement at all, okay? We're getting the crossover at the same time. Now, in this case, the crossover is actually happening before the candle showed itself. So it doesn't always have to happen the other way around. So when we saw that candle, look at this candle. Here it is, the 157 candle, or 1357, depending if you're using military time. Look what happened. We got this, we got this, we got the crossover, and then we got all of this, guys. We got all of that. We got all of this. Huge move, huge move. Now, can we use this to find out other information? Like, can we use this for a long? Yes, we can. If we want to look for a long opportunity, we can go maybe this example right here. I don't know. But even though you should never kind of like, blindly try to catch a knife, we're extremely oversold. This here at 1448, let's say 1448, we're extremely oversold. And we're in a downtrend. We don't want to catch knives, so I don't encourage this too much on a day like FOMC. I don't encourage this, but this could happen on a regular inside day, it's going to happen on a choppy day. This can happen, and it happens all the time. So for a long, we want to do the exact opposite. So when price is coming down, we look for oversold, which is right here. We're oversold. We're under the negative 50. And in here, what do we see? Let's go ahead and check out our indicator. At right here at 248. At 248, we see this candle, or this bar, I should say, this bar right here with good volume and barely any movement. So what this means is sellers are pushing the price down, but they're unable to make it move very much at all. So it's really not moving. Good effort, but not much result. At the same time, what are we seeing here? We're seeing that we are getting a bit of a crossover on that next candle. So let's go ahead and check out this 1448 candle, 248 candle. And here we are. Yeah, 248 right in here. So if you enter it on this candle, you would have got a really nice move. The only problem is that in this case, you would have had to catch the next candle. You couldn't have waited for the crossover as of, well, actually, yeah, the crossover happened. No, the crossover didn't happen until this candle. Yeah, so you really wouldn't have gotten a crossover signal, but in a normal market, or in a better, not so much trending market, but more of kind of like a range market, this would have had some continuation, and you would have got in on this trade and you would have done well. Now, even if you did get in on, let's say, this candle, and you just went in on it because you saw that the market was stalling out and you were oversold, and you just went in on this candle itself, you could have still done okay for yourself. You would have had about a 2 point, like a 2 point. Is that a 2 point? I think it's a, maybe these candles are huge. So let's see. You would have had a 11, almost 12 point drawdown, and you could have had on this one candle, since this was FOMC, these candles are humongous, you could have done about 50 points, on this one candle here. Now, that's just how to look at it from a perspective of a long, and probably a bad day to give you an example for those. But now let me give you an example of what happens when you have a little bit of volume, but a big move. Let's see if I can find a candle that represents that. With a little bit of volume, but a big move. Now, what does a little bit of volume with a big move mean? It means that there's not a lot of the counterparty in the market trying to push against us. So let's see if we can get a good example of that. Okay, here's one. Here's a candle here at 228, at 1428. At 1428, we saw this candle. We saw this candle, and we saw this bar down here. Now, check out where the lines are. The lines are moving on down. They're right in the middle of the zone. That's why you don't want to get involved in a trade at a zero line. You don't want to get involved when we're right around zero. We want to get involved when we're at the extremities. So if somebody saw this candle and said, "Oh, yeah, I want to counter this move. This is a big candle. I want to counter it." Well, you may not want to counter that move or fade that move, because at that 1428, going to that 1428, which is right here, which is this one, we saw that we got really kind of like below average volume. We didn't have a lot of volume here in this bar, really not much at all. But look how much the candle actually moved. That means that there are less than average amount of sellers pushing this move down. And even with less amount of normal sellers or volume, it moved a lot, which means there's nobody buying that. If there's nobody buying it, you don't want to go up against that army by yourself. So you don't want to counter that move, because if you counter that move, it means that you're going to get blown away. So wait until you start seeing some resistance. Don't take that trade. So let's go back and see what happened on this candle. So this candle came down. If you were to try to counter this move and gotten long here, you would have gotten wrecked, because it kept going down much further. Okay, so that's how you can use this indicator. Now, you may want to ask yourself, okay, well, what indicator is this and how do I get it? Okay, very easy. This indicator is called RedK EVEREX version 2.0. Now, it is available on TradingView. I am not sure if it's available on any other platforms besides TradingView. I love using this. It is been a game changer for me. So if you guys want to utilize this, it's completely free. What I do recommend is that when you do go into the settings, what you want to do is copy my settings, because I've played around with a lot of them and this works really well. So you want to change the colors up because the colors that come with it are pretty ugly. You want to use the dark colors for the volume. And what I do is I like to keep my top of the bar, I like to keep it transparent. It just looks better, okay? So I'm gonna scroll down and show you my settings here so you guys can have for yourself. All right, nothing here that I want to say is proprietary, with the exception of down here, I erased all of the presets and I added a preset, even though it says quarter level and 2/4 level, ignore that. Just highlight them and then go over here, pick any color you want. I use this color for my 50 lines and I put in a 50 and a -50 and I made these solid lines. I didn't want dotted. And that's pretty much it, guys. That's it. That's all I had to do. I didn't have to change anything on inputs. Don't worry about this. I didn't change anything there. Nothing on visibility, so you don't have to worry about any of that. All right, guys, so that's pretty much it. And if you guys enjoyed this video, make sure to subscribe and hit the notification bell because we do go live trading NASDAQ futures every day at 8 a.m. And if you want to join our Discord community, which has all of the educational materials you'll ever need, especially if you're a newer trader, right in there for free as well. Go ahead and hit that link down in the description to our Discord. And if you guys have any suggestions for any further videos, also leave it in the comments. Thank you guys for watching. Love you, and I'll see you next time.